Hey, good morning. Tony LaPorta here with nakedtrader.com. Well, we all saw the PPI data that came out this morning, and one of these days Bernanke is going to have to quit talking through his teeth, talking that there's no inflation out there. Now we're seeing it at the producer level, and and that eventually will filter into the cost of producing goods, and it's not good. I mean, you and I, we're at the gas pump. We're in the grocery store. We are the ones paying up for fixed costs, and it's just not good. It's just not good out there. I mean, that's why we're seeing riots. I mean, people are hungry. So. A result of that number this morning is we see the bond market is falling apart. Last I saw, the bonds were 118.20, right on their lows of the day. And it's also actually not brought an offer to the futures markets, but the futures were a little bit better before the data actually hit. So it has brought a small offer to the futures market. Believe me, that won't last long. As the unwind continues at the slowest pace it is, i.e., those selling bonds and buying stocks, we will see. I wrote about it last night. We will see new highs in these indices today, and I still do believe so. It's right now 10 past 8. We have industrial production out in 5 minutes, so that could maybe be where our bid comes from. Anyhow, I've been writing that I don't, with the inflation data out there, the PPI and CPI, I've sort of turned my hand around and want to sell the treasuries, and so far so good today. We will see what tomorrow brings with CPI, but so far so good. But now, I just want to give you a little bit of insight into how I think for a living. I have a formation. 32 years of analyzing charts. You will not find this formation in any technical analysis book. This is my trade, and the trade presented itself on Monday, and I call it the tight range follow through. It could be higher, it could be lower, but on Monday we saw a very tight range in the S&Ps and in the Nasdaq, and the call is basically, go home short, sell rallies all day, blah, 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 blah. Well, yesterday, the Dow closed down 40. I don't know, Nasdaq was down 9 or 10, who knows? Doesn't really matter. The indices closed lower. They didn't close dramatically lower. They actually closed with a premium to cash. So it was a good day to scalp. Yesterday was a good day to scalp from the short side. I looked at the markets last night, and we had a more quiet trade, low volume trade on a correction, and actually yesterday the S&Ps traded in a smaller range on Tuesday than they did on Monday. So that's telling me for me, volume equals validity, and we had none. And even though the market broke, they didn't close that bad. I think the SPUs are down like just over a handle. And the Nasdaq futures are down, less than a point. So the way I think is, you have to buy this stuff again. And I wrote yesterday that I'm anticipating new highs for the move today. We've already seen new highs in the Nasdaq futures and the S&P futures. The Dow futures are close, very close. So we will see what industrial production brings in less than 5 minutes, but that's about all I have. I do believe that the next leg lower in the bond market began today. So this is Tony LaPorta with nakedtrader.com signing off. Cheers. Have a great day. Bye now.